Good morning. This is Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, June 18th. Prices overnight tried to bounce here a little bit. We're up 1 to 2 right now in the corn. Bean complex is mixed, up 2 to 3 in the beans, down a few ticks in the oil, while meal has rebounded about $3 to $4 a ton. Wheat prices are now back lower across the board, pretty much 1 to 3 lower across all three classes. Speculative traders yesterday were pretty healthy sellers across the ag space, except for bean oil, where they were buyers of about 1,000 contracts. Last Friday's commitment of traders report from the CFTC did show money managers' short position in bean oil had swelled to nearly 76,000 contracts, and that's their largest short position in just over 5 years. The rebound in bean oil prices yesterday in the second half of the session was driven by a friendly NOPA crush report that showed NOPA members did process nearly 184 million bushels of beans in the month of May. While this was above expectations, bean oil stocks fell to 1.742 billion pounds, which was below expectations, suggesting a strong rebound in consumption during the month. This likely increase in demand fueled by an increase in usage for biofuel production as bean oil prices had dropped to more competitive levels for the production of renewable diesel, but also in the global vegetable oil trade as well, as we saw the USDA kick up their export forecast for bean oil in last week's WASDE report. Crop progress and conditions after the close yesterday, mostly in line with expectations. Corn and bean ratings did drop 2% in good to excellent. That said, however, ratings for both crops remain at their highest levels in 4 years. Bean plantings at 93%, perhaps a slight touch below expectations, however, just above the historical average of 91%. A little bit of surprise in wheat conditions. Winter wheat conditions popped 2% to 49% good to excellent, while harvest advanced more than expected to 27% done. That is double the historical average and the highest pace in 8 years. It also seems like the higher conditions are trying to catch up with some of the better than expected yields we're hearing from harvest in the southern plains. Spring wheat conditions jumped 4% to 76% good to excellent, more than expected ratings here, also the highest in 5 years. Overnight, we got some customs data information from China showing their corn imports in May, just over 1 million metric tons. That's down 37% from a year ago. Year-to-date imports have reached just over 10 million metric tons, down less than half of 1%. Earlier in the month, soybean imports were reportedly running 8% below year-ago levels. So we had an inside trade here overnight in corn as prices try to bounce from the turnaround lower trade from last Friday. Hot, dry conditions in the southeastern two-thirds of the Midwest. The rest of this week and really into next week with very few rain in this area, just a few isolated pop-up showers possible. Heavy rains continued in the northwestern third of the belt, producing some localized flooding in central Minnesota. I suspect we're going to see much more significant drop in conditions here, at least in the east next week. July beans held above their May low overnight, setting up a little bit of a bounce so far. Board crush margins have rebounded to about just over $1.10 a bushel, and that is a 6-month high here. July meal keeps bouncing off its 50-day moving average support, while bean oil consolidates just below the 44-cent level. And in wheat, prices just continue to carve out new lows for the pullback. New contract lows yesterday from Minneapolis. To me, prices are getting overdone, largely due to expectations for higher production here in the winter wheat areas. I suspect we're going to carve out a harvest low sometime here in the second half of June, while shifting focus to tightening supplies led by lower production in Russia. Thank you for listening. Have a wonderful day.